Happy Tuesday, everybody. I hope you had a good long weekend. Once again, the markets were closed yesterday for the Martin Luther King Jr. holiday. So here we are. Today is January 17, 2023, and this is your Tuesday market update. Special location for the video today, and it doesn't count if I told you, but if you want to guess, I'm at one of the few places that you can have breakfast on the Atlantic Ocean and dinner on the Pacific Ocean. More importantly, as always, let's review the market action from last week and do a short preview of the coming week. After a quiet weekend of news, stocks gapped higher on Monday on leftover momentum from Friday's market action. Soft landing and lower terminal rate phrases were being thrown around again. Speaking of which, we had so many of those new words and phrases last year: supply chain, terminal rate, perma-crisis. What will we get this year? Anyway, Fed futures were back to pricing the terminal rate back below 5%. Markets got a bit more fuel with the eco data and inflation expectations from the New York Fed. 1 year and 3 year expectations down, 5 year up slightly. Household income was up, but last week wage growth was down. Not sure how that works. We'll see how that goes. Markets were solidly green until some of the Fed heads got to talking. Daly and Bostic, both trying to keep the markets honest. All Fed heads and Powell himself have been saying that they are going to keep raising rates. Kashkari last week said over 5.4%. Why doesn't the market? Why doesn't the market want to listen? I don't know. Maybe the base, the past few years, included the Fed stating that doubling down on over and over again the fact that inflation was transitory. Add in that their forecasting may be in line with the weather forecasts. Last December, the forecast for December 2022 Fed rates was 0.25%. We ended the year at over 4%. Why don't people take all they say as accurate? Really not sure. Maybe that helps. Fed heads and the Powell speech planned for Tuesday had the market on edge. Gave back all the green. S&P down a hair. Dow down about 1/3%. The Nasdaq stayed positive at over 0.5%. Just a fun fact: Monday was the 16th anniversary of that appendage on the end of your hand, the iPhone. Only 16 years. What did we do before that? Not quite sure. On to Tuesday, when markets opened pretty choppy, as it looked to hear what Powell was going to say in Sweden at the symposium, and where the prepared remarks left very little new in the wind. He did cause a bit of a fuss, not much, but a bit, when he said that the Fed has to stick to their mandate, which is new in what way? None. So the selling did not take hold, and as things have seems to have been, first as bad news as good news. The World Bank also estimated that 2023 GDP growth in the U.S. is an abysmal 0.5%, the lowest non-recession figure since 1970. Then an optimistic tone came into the market as the upcoming CPI number, along with the strong 3 year Treasury auction, had markets finish on the positive side. Dow was up about 0.5%, S&P up just under 0.75%, the Nasdaq up 1%. Wednesday brought about the tepid buying from Tuesday, and it came in a bit more fiercely on Wednesday. Once again, all information being read is good. As you've heard it from me before, all to the one side of the boat. Everyone was looking for the CPI to come in soft and supportive, not only peak inflation, but also inflation is coming down. Remember, in case you've been hiding under a rock, that is what the Fed wants to see. Soft landing talks continued, and don't get me wrong, this is a great thing and one I believe in. The only issue, and I'll talk more about this another time, is that even if things do turn down on the inflation side, we still have to get valuations in line at some point. We won't let facts get in the way of a good story, not just yet. Australian and Italian retail sales beat expectations. Chinese reports about possible rate cuts didn't hurt either. Fed heads Collins commented on a solid comments, and then a solid 10-year auction. Dow finished up 0.75%, S&P up 1.25%, the Nasdaq up 1.75%. Stocks were all over the place Thursday morning. Stocks gapped higher at the open and held on to the green for about a breath, and then came right back into the red as traders sifted through all the latest inflation data. Plenty to go around. Headline CPI came in slightly below estimates for the year over year, and the core was in line. Jobless claims were only 205,000, and as we know, labor market. That's all the Fed cares about. I'll repeat what I said last week. It may just be that we'll see the soft landing. Growth and labor keeps from falling off a cliff, but inflation comes down. Wouldn't that be something? As I mentioned, we still have valuations to deal with, but one thing at a time. Markets are pricing 25 basis points on February 1, and the Wall Street Journal's Timmeros, the Fed whisperer, he is now echoing the 25 basis point song. So we heard a little bit from of some hawkish tones from some Fed heads, Harker and Bullard, but remember what I've told you about the Fed jawboning the markets and using their words to move markets and test markets. Markets tried to sell off again, but too much happiness, and they're in there, and somehow the buying came back in. And even with a slight give back at the close, the markets finished strong. Dow up about over 0.5%, S&P up 1/3%, the NASDAQ up about 0.5% also. Markets started a bit bumpy on Friday morning. Bank earnings were just the news, but the market run up over the past few weeks is probably more to blame for the less than stellar start to the day. Going into the day, strongest 1 week performance since November. A bit of some early profit taking since the CPI numbers were good, but not great for the bulls. And the Fed heads keep talking 5% plus terminal rate and higher for longer. Ultimately, that could not keep the optimism away. University of Michigan survey sentiment was higher again, incremental, not absolute, up 2 months in a row, but still at historically low levels. But back on the positive side, the inflation expectations did fall again, lowest level since April 2021. Overall, the sellers stepped aside and the buyers stepped back in, bring the averages to close strong for the week. The Dow up 2% on the week, 3.5% year to date. S&P 500 was up 2.71% for the week, 4.2% since the beginning of the year. The NASDAQ up nearly 5% for the week and almost 6% for the year. Another short week this week, but a lot to cram in. Today, as we get started again, we'll get some eco numbers about manufacturing. Recall that we need to see the growth overall not fall apart. Retail sales tomorrow, Wednesday, and PPI as well, and that is going to be key to see if costs for the producer side are in line with the consumer action. Recall the dissection that has been done on the consumer side. Service, housing, labor, so much. PPI is also complex, but seems to be a bit more pure, or at least for the bulls. Fed heads are back in action. Williams, Bostic, Harker, Logan, Collins, Brainerd, Wallard will all be in action. Note that I did not cover this, but there will be some musical chairs on the Federal Open Markets Committee. There were some as the calendar rolled over. So there are a few new names, and we're not sure yet how hawkish or dovish they may be. We'll hear from them, though. So we'll also see the beige book and more eco numbers, and don't forget jobless numbers and even some housing data. So as we go get another short week started, keep in touch, keep nimble. There's a lot going on both in the market, update video, and the planning videos. We get the year off to the right start. Stay in touch and have a great week.